A long way from the $3.30 rejected by the board of Billabong. And as Chris rightly says, the last time a group went and took a look at the books, they ran a mile.
Yeah, that's right. It's been an absolutely miserable year for Billabong. It's down 40%, the share price, seen 3 profit downgrades in the last 12 months. And we've seen what has been offers fall from $3.30 to a third of that price now. And that due diligence has been granted. I think now with that granted, there probably is a fair chance of a formal bid being put forward by the consortium, but the question will be around the share price. I think after this latest profit downgrade that was came through after that $1.10 share price, I think the consortium may well rethink their share price offer. It could come in lower than $1.10. And looking in the space of competitive bids coming through, I think it's probably highly unlikely. I think Billabong, really potential suitors for Billabong have been exhausted over the past 12 months, so the likelihood of further competitive bids is probably very unlikely. So Billabong at the moment, it's a difficult one. Certainly a lot of volatility in the share price, but I think any proposal should be taken seriously. Any offer should be taken seriously by shareholders. Look,
Tim, also wanted to get your thoughts. The story we sort of had leading into you guys, Transurban issuing shares to UniSuper.
That's right. It's $6.15 a share it has. That will take UniSuper's holding up to 7.2% in Transurban. Now, Transurban holds a stake in 7 toll roads, Victoria, the Westlink M7 here in Sydney, as well as the Eastern Distributor, and one highway over in Virginia in the US. And it has been a little bit of an average year for Transurban. The stock's up around 8%, but it has underperformed the broader market in a year where investors really have sought out dividend yield as well as safety in the market. So really investors, I think, probably a little bit disappointed in the guidance that they gave for dividends moving into 2013. Certainly there's been difficulties around some of their upgrades to roads. Weather has impacted severely on their M2, which is one of their biggest toll roads, M2 upgrades. There's going to be delays likely there as well. And they're also facing some growth headwinds moving into 2013 as the company is going through some transition at the moment. But there are some positives on the upside here as well. I think traffic volume should increase for them. The delays to the M2 probably should be short-lived. It really is dependent on the weather. But there is some defensiveness in this stock as well. The earnings stability as well as the relative certainness of the earnings. There's value in this stock, it appears, as well, and it does pay quite a healthy dividend. So this news today, taking up to stake in 7.2, probably should see the share price rise.
Your thoughts on the market today, and I suppose the rest of the week. Is there anybody out there at the moment doing anything on the market?
No, it's going to be a very quiet day. It was nice to get a seat on the train this morning, but the Aussie market will be looking at low volumes today. We do have an early finish as well, so the market closing around 2 o'clock Australian Eastern Standard Time. I mean, the risk-off tone we saw in markets in the US, the US markets falling 1% on Friday. It wasn't quite reflected as certain in such certainty in the commodities space, which was actually quite mixed. Oil was one of the worst performers. It was off 1.6%. It took the biggest hit after the US physical cliff headwinds in the headlines over there. But we saw copper actually higher and gold and silver move in opposite directions. So in a quiet day today, we don't have any local economic data released. There's no really global economic data released until Thursday. On Thursday, we will start seeing some US data coming through. We've got housing price numbers, consumer confidence numbers, new and pending home sales from the US on Friday. So the market can look forward to that. But ahead of a 2-day break over Christmas and Boxing Day, you can expect that the Australian market will be very quiet today.
Chris was asked at last hour, trade of the year, what's been yours?
Well, if we look at the banking space, I mean, financials have been a big outperformer this year. All the big 4 banks, excluding NAB, have performed very well, topped by CBA. It's up something like 26%. And then you can add the dividends in on top of that for a very healthy return. But within the financial space, it's hard to look past Perpetual, which has been a significant outperformer. It's up something like 67% this year. And I mean, it's a stock that's very leveraged to market conditions, which have been very weak. So investors, I think, really forward-looking in terms of this stock. It is in sort of a bit of a turnaround at the moment with a new CEO, cost savings, etc. there. But you can also add in around 90 cents per share of dividends, takes the total return of that stock up over 70% for the year. So if you bought that stock January around $20, now trading at $34.